Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing the chapter called as investment account. We are going to do question number 3 today. We are going to do question number 3 today in the books of Mr. Investor. In the books of Mr. Investor. You are doing investment in 6% government bonds. Investments in 6% or investment account of 6% government bonds. Okay. For the year ending, they are saying that the year ends on 31st December. For the year ending 31st December. Okay. Let's start. Mr. Investor furnishes the following details regarding his holding in 6% bonds. Opening balance on 1st Jan 03, so 2003, to balance brought down. Opening balance is 60,000 rupees. Okay. Cost of those debentures is given to you as 59,000 rupees. Right? Let's read the last line. Interest dates are 30th September and 31st March. Working note 1. Interest payable on which dates? They are saying that 30th September and 31st March.
Oh, it's an opening balance. Okay. Yeah.
30th September and 31st March. Okay. Now let's see this. Working note 2. Let's calculate the interest on opening balance. Interest on 1st Jan. You have debentures of 60,000. These are 6% debentures. Now the closest previous date is 30th September. So that means 3 months. Right? Someone please help me calculate this interest. 900. So the interest on my opening balance is 900. Fine. Let's start. On 1st March, 100 units were purchased, ex interest 98. Right? I'm going to buy on 1st March. Debit what comes in to bank. I'm buying 100 units at 98. Now when it is not specified, it is always assumed that the face value of debenture is 100 rupees. 100 units of 100 rupees each. That means 10,000 were debentures. Let's calculate the interest first. Working note 3. Interest on 1st March. Interest on 1st March is 10,000 into 6% into 1st March. That means 5 months. Someone please help me calculate this. 250. Okay. So the interest is going to be 250. Am I purchasing come interest, X interest? I'm purchasing X interest. Okay. So I don't need to deduct the interest. Let's find out the capital value. I'm purchasing 100 debentures at 98. That means 9,800. I'm purchasing 100 debentures at 98. That means 9,800. So 9,800 and the interest is 250. Fine, do we get this thing clear? Next, on 1st October. Now before 1st October, there is going to be 31st March. On 31st March, interest payment has to be done. Right? So working note 3. Interest payable on 31st March. Interest payable on 31st March. Now total, what is the value of securities you are holding? 60,000 plus 10,000, 70,000 worth securities. 6% and closest previous date 6 months. Someone please help me calculate this. How much is the interest? 2,100 is the interest due on 31st March payable. This goes on the credit side, 2003. This is 31st March by bank, the interest is 2,100. Interest is 2,100. Fine. Let's move on ahead. On 1st October purchase, no, on 1st July sold 200 ex interest debentures sold. Debit what comes in, credit what goes out. On what date did I sell? On 1st July. Sold by bank. I have sold 200 debentures. Face value of each debenture is 100 rupees. Let's calculate the working note, guys. Working note 4. Interest payable, no, interest due on which date? 1st July.
So
Yeah.
working note 3, interest payable means that is due, right? That is not received. No?
Which one?
Working note 4, the 2000.
This is what the company has paid you.
This is not what is you are supposed to receive.
No, this is the amount that is actually transferred to your account.
Okay, so you've received this.
And the remaining all the other interests are made due. Right? Interest on 1st July. Now the interest amount is when on 20,000, 6%. For how many months? You just paid interest on 31st March. So from March to July, April, May, June, 3 months. Someone please help me calculate this. 300. 300. Right? Now, is this cum interest or X interest? This is X interest again. Let's also find out the capital value. Capital value is going to be, I'm purchasing 200 units of instrument at face value only, 100 rupees. So its capital value is going to be 20,000. Okay. So now interest is 300 and capital value is 20,000. Now whenever you sell, you have to calculate your profit or loss. So working note 6. Nominal value, capital value. Right? You have to consider all the transactions up to the date of sale. You do not consider the transaction of the sale date. All the transactions that have occurred before the sale date, all those transactions have to be considered. So your nominal value is 70,000. Someone please add the capital value 59, 68,800. Right? Now, I am selling debentures of nominal value 20,000. So in that case, at what price should I sell them? Expected selling price. Your expected selling price will be how much? Someone calculate please.
1967.
1967?
19657.
19657.
57.
57. Right? Actual selling price is 20,000. I should have sold it for 19,657 rupees. Instead, I have sold it for 20,000. So in that case, I am making a profit
343.
343. Profit will come on the debit side here. This is 1st July to P&L. Profit 343. Right? So I made a profit of 343 in the transaction. Next, you've sold. Then 1st October. Now before 1st October, you're going to have 30th September. So on 30th September, again interest is payable. Interest on 30th September. Right? Now, what is the total value of securities that you're holding as on 30th September? You had 70,000 worth securities, out of which you have sold 20,000 worth securities. Therefore, the net securities that you are holding is 50,000. 50,000, and these are 6% securities for 6 months because your closest previous date is 31st March. So
1500.
please help me calculate this.
1500.
1500. Okay. So this is going to be on 30th September. The payment of interest by bank. This is 1500. Fine, do we get this thing clear? Okay. Once this is done, then on 1st October you purchased. Debit what comes in. So on the debit side, 1st October,
So you want it 6,100.
it's upon 100 only we take 6%. Right? To bank, I'm buying 50 units. Right? 50 units means 50 units of 100 each, so that is going to be 5,000. Right? Now, working note 8. Interest on 1st October. 50 units of 100 each means 5,000. 6% is the interest, and 1st October. You just paid the interest on 30th September. 30th September and 1st October, 0 months. So the interest is going to be nil. Okay. Let's find out the capital value. Capital value is 98. I have purchased 50 98. Right? So 50 into 98. 8 5 are 40, 45, 49,000.
4,900.
4,900. Right. 2 zeros are already put. Right? Since this is come interest, I should less the interest. Interest is going to be nil. Do we have brokerage in the transaction? No. So this is going to be 4,900. Right? So my interest amount is going to be nil and capital amount is going to be 4,900. Fine, do we get this thing here? Next. We finish 1st October, then you have on 1st November, I have sold. Debit what comes in, credit what goes out. On which date am I selling? On 1st November I am selling. By bank. Right? I am selling how many units? I am selling 200 units. 200 units of 100 each. 200 units of 100 each. Fine, did we get this thing here? At 99. Working note 9. Interest on 1st November. 20,000 worth instruments you are selling. The interest rate is 6%. 1st November. You just paid interest on 30th September. That means 1 month.
100.
This is 100.
Yes.
Okay. So interest is 100. Now let's find out the capital value. I have sold 200 units at a price of 99 x interest. 99. Someone please help me calculate this.
19,800.
19,800. Since it is x interest, I don't need to deduct the interest. Income is 100. This is 19,800. Right? Now, let's see this. You need to calculate the profit when you sell. Let's calculate the profit. Working out 10. Nominal value, capital value. Right? Nominal value 60, 70, 75,000 you had purchased, out of which 20,000 you had sold. So that means you have 55,000 as on 1st November. You have to consider all the transactions prior to the date of sale. So you had 75 minus 20, that's 55,000. Someone please get me the capital value of these transactions. 59,000 plus 9,800 plus 343 plus 4,900 minus 20,000.
54,043.
54,043. Right? I'm selling government bonds of 20,000. In that case, how much should my expected selling price be? Someone please tell me.
19,652.
19,652. And my actual selling price is 19,800. I should have sold them for 19,652 rupees. Instead I've sold them at 19,800. That means I'm making a profit. Someone tell me how much is the profit?
148.
148. Profit on the debit side, 1st November. To P&L, I'm making a profit of 148. Right? Okay. That's it. I need to tally the account. Let's tally the account, guys. 60, 70, 75,000. 75,000. That is 35,000. This is 31st December by balance carried out, right? You have to always calculate interest on the closing balance. So let's calculate interest on the closing balance. Interest on 31st December. 35,000. Interest rate is 6%. And you have just paid interest on 30th September, 3 months. Someone please help me calculate this.
525.
525. So the interest is 525 on the closing balance. Right? Now, let's add the capital amount. Someone please add the debit side of capital. Someone please add the debit side of capital.
74,
140.
74, 143.
191.
74,
191.
74, 191. Okay. Check.
Yeah, correct.
Yes, sir.
74, 191. 74, 191. Find out the difference, please. Find out the difference, please.
34, 391.
34, 391. Now add the credit side of income. Add the credit side of income.
4,525.
525. Yeah.
4,525. The difference, 31st December. 2 P.M. Yeah, how much is the difference, guys?
3375.
337. ज़्यादा होगा. Because this
3375.
3375. Right? That finishes that sum. We stop this here for the day. Thank you very much.